Hi guys, it's Simon at Kairos Capital Markets. Today I'm going to explain to you what happened to the euro dollar, why it shot up so much and why we got such a high wick so far, and where we're going to go for the future of 2017. So a lot of students come to me and said, what's happened, look, the dollar's changing, blah blah blah. And if you look at my previous videos on YouTube, especially one about the creating an index, I explained to you that I was expecting the dollar to have a pullback. So if we go to the DXY, for example, here, the DXY has powered out from everything possible, all through its range, through 100, broke the 100 level and smashed back up again. So I was looking for a pullback to value before I got in on any of the dollar long trades. The extremities of the Fibonacci retracement is 102 was actually the next level to pull back to anyway. It is more of a daily level, but it is current on the weekly chart as well, and the Fibonacci just says, yeah, it looks good to go there. So I'm looking to buy the dollar around this level here, I would be, which isn't an issue too much, but I'll need to get the signal. So if we go back down to the euro chart, after the Fed rate hike here, people decided that they're just going to sell the euro or just buy the dollar at every possible point, and what they didn't ever take into consideration is the way the market behaves, and it needs a pullback. Now, it isn't the first time I've said that it needs to pull back down to 1055, and this is what it's doing now. The reason why we've got such a huge wick is because people will be doing trades like this. They put their trade here, it's come down, oh, I want to buy there, it looks good, and put their stop like that there. This is what the retail traders do, and then you just get stopped out, simple as that. And there'll be so many stops around this area to close out their short positions for one reason or another. They've all got stopped out, simple as that. So thank you for the money, it's very nice. If you want to know about smart stop placements, you really should be putting it in an area where it is actually protected, and only protection on this chart here would have been, especially above this level here, it would be nice to have a nice stop there, or here. It's simple as that, above the 50 EMA. That's the only place you could put it. But to enter here to think it will fall down, really with no proper test. Look at this key level here. It's super strong level there. It is. It's a monthly level. And for people to think, oh, it will just drop, that's it, simple as that, well, you're mistaken. You lose money that way. So let's go down to the 4-hour chart. Let me explain to you what I was seeing on the 4-hour chart. This is when the rate actually changed here. Now this time here, it just dropped out the sky. That was expected, no problem at all. But I was expecting a pullback. Now I know people that were selling this chart around here. Oh, it's tested the 4-hour 50. Let's sell. And I was just thinking, no, there's something wrong here. It needs a pullback. It needs a test. You need to get a breather in, because you want smart money or big money that come into the market at certain points. They're looking for value, simple as that. And you can see here's the stop there. Here's all the stops got stopped at. This is where smart money is now going to put its money back in again. The next thing as well was this bullish MACD divergence. Now, don't go too much on about bullish MACD divergence or bearish divergence. It doesn't matter too much, but it's just a sign of indication. So here we got higher lows here all the way through. You can see it, but here the chart shows lower lows all the way through. Now the first sign I saw we would have a problem was people drawing trend lines like this. They're going, oh, look, it's fine, it's fine. Once it breaks down this trend line, that's it. It will go down further. And I was like, you're only looking at one chart. You're not looking at the bigger picture here. So when we had this pullback here, to me, this is one low. This is a higher low here, or at best, it's at the best case scenario, it can be classed as a double bottom. Either way, both of these situations here are bullish, and I know it needs to pull back up to this key level here at 1055. So for me to see this, I'm not surprised, and this is why the euro has shot up recently. And obviously I don't expect it to go too much higher. I expect it to plateau out, give us a nice signal, we can sell again. Likewise, my other euro charts, let's look at euro pound for example. People said to me here, oh, I'm going to sell here. Okay, great, you can sell there, no problem at all. But I want to see the pattern being a head and shoulder pattern. There's the left shoulder, here's the head, here's the right shoulder. That's what I'm looking for. So I still expect the euro to actually, on this chart anyway, to just head up a little bit further, simple as that. No matter how you do the the Fibonacci, 382 comes up to 87. Then you've got, we could be at the 382 now retracement. I'll look at the chart later on over in the new year, so it happens. But yeah, this is what happened to the euro. Simple as that. This is why it's powered up. And it all powered up because of one chart here, the DXY, which needed a pullback. So remember, markets need to breathe all the time, guys. And if you put your stops in silly places, you'll get stopped out. Simple as that. Because you didn't let your stop prove you wrong. Because technically, you're not. Although you got stopped out, you was never wrong in the first place. But you entered the chart at the wrong time, put too much of a tight stop on it. That's impatient, that is. But hey, guys, I can teach you more of that later on. Enjoy 2017, guys. Thank you.